What's up, traders? Welcome back to another video. This is the Bank's Capital channel. So we are going to talk about trend lines. Probably you've heard about trend lines as a trader, and today I'm going to give you some strategies or the strategy I use when trading trend lines. If this interests you, please stick to the end, because you can use this strategy to add to your list of strategy, or if you're a beginner, you can use this to test to try make money with it. So without wasting time, let me jump direct to the tutorial. So I'm going to open my gold. I'm going to open gold ZAR USD. Let me open gold. Yeah, so this is gold. This strategy is good for all time frames, but I will prefer you to consider using the 15 minutes because 15 minutes presents a lot of opportunities. Either way, you can also use it in the daily, weekly, and mostly daily and weekly, and the 4 hours. So for that reason, today I'm going to use the 15-minute time frame, because probably you'll be trading every day, and instead of waiting for that for a long time for a setup to occur, it will be easier for you to have multiple setups in a day, or multiple setups almost every day. So as you can see, this is our gold. This is our gold chart. Yeah, this is our gold chart, and I'm going to show you how you use this strategy. So let's say you want to take a trade. First of all, before you even take a trade, you should learn how to, or you should have learned how to draw a trend line. And because this will be very helpful in identifying your next exit or entry points. So for example, this chart, I can scrolling it around. Let me see if I can find some setups. Yeah, actually there's a lot of setups here. So in order for this strategy to work, first of all, the trend line must break. The price must break the trend line. The price has to break the trend line in order for you to take a trade. And the second thing is that you enter your trade. After entering your trade, you exit. Entering your trade, you exit when the trend line, or when the price violates the trend line or breaks the trend line. So if the price exits, or if the price breaks the trend line, you exit. It's just as simple as that. So something like that. So these are the most common rules, or these are the rules that we are going to follow. So for example, let me say this is our chart. It's a 15-minute chart, and as you can see when I'm scrolling it around, it is trendy. Yeah, so for you to take this trade, make sure you respect the direction of the market. If the market is in an uptrend or a downtrend. So for example, we can see that in this trend line, in this chart, here is our first trend line, if I draw it like that. So when drawing a trend line, you make sure that your trend line touches at least 2 to 3 points for it to be a valid trend line. For example, this point, that point is our first trend line, is our first touch, second touch, and third touch. So these directly shows that it is a trend line. The market was in a trend line the market was respecting this trend line, and the direction of the market was going down. When you look at this trend line, you'll find that the market went down, then reversed, and then it tested the trend line once more, then went down and did what? Broke the trend line. Now, once the trend line has been broken, like this area, once the trend line has been broken, now that's the area you would figure out, or you find your entry. So for example, I could consider here to be our best entry point at this location. So after entering, you should draw another trend line from here all the way up. Now, when drawing this trend line, you'll not easily find the points unless you draw 2 points. For a trend line to be valid, you must draw, or the price must touch the trend line almost twice. So for example, the price touched it here. Okay, let me see. That was the beginning of our trend line. Then after this being the beginning of our trend line, the price touched the trend line there again. So this trend line was violated. You take an entry here. You take an entry here. After taking an entry there, your stop loss should be lower. It should be at least below the pivot or the lower next pivot, for example there, or the lower high, lower low. This is our lower low. So for this trend line, this is our lower low. And again, you can see that there was a build up here. The market was testing this point in a very long time. It played like it was in a correction or something like that. So there was a very low. There was a there was a build up here, and you can also see there was a gap towards the price gapped going up. So high chance this is a sign that the trend was about to go up. So you can see that in this trend line market, the price was respecting our trend line, but it broke the trend line here. So after breaking the trend line here, we could consider this as our entry position. So let me say you entered there. Let me say you entered here. This was our entry position. Probably you are wondering, where should we have our exit position? So this is the entry. This is our entry. I'll have it like that. Entry. Then in order for you to find or to determine our exit position, you look at you'll be observing the trade when the market is moving. For example, this market was moving up consistently, up until here, where the market broke the trend line. It violated our trend line. So after the market violating our trend line, here should be your exit point. So here is supposed to be exit, but this is our exit. So if you were to trade, our trade could have started here, then all the way up to here. You can see that's a good risk to reward ratio, and this is a very good strategy. In fact, it is very simple. Just look at the previous trend line. If it has touched 3 times, you wait for it to be violated if you're not in the trade. So if the market breaks the trend, you enter your trade there. After entering your trade, you patiently observe. The market will be going up, and most of the time it will be touching the trend line. As long as the trend line is not violated, you stick with your trade or you hold your trade. For example, this market went that way up to here, it was bullish up to here. Then when it reached here is when you need to exit. Here is our exit. Previously this was our entry, this is now our exit. Now I'm not going to leave it at that. I'm going to show you another example. So for example, let's say this trade and good, it was a win. So let's look at another incident or another scenario. So this trend line broke here. Since it broke here, you now draw another trend line because this one has been violated and the market has changed its direction, going down. So you draw another trend line. High chance you'll draw it from here to here. Make sure the trend line is at least 2 touches. Yeah. For example, this is our first touch, second touch, and probably another touch will be as the market goes on. So this trend line was violated. This could be our exit, but at the same time you could enter another trade here, another trade doing what, going down. Yeah, so let me say this is now another trade you are to enter. That's a sell trade right here. Your stop loss next to the next pivot. This is our current pivot where the market went back to test or to do a liquidity sweep. So here will be our stop loss. Let's put it slightly up above. So as you can see, that's how it is. Let me see. So here was our previous exit and this was our entry. Now this is our new trade. For this trade, you'll be adjusting your stop loss. For example, here you'll be trailing your stop loss. If the market went and it tested the trend line, then it went up, you put your stop loss there. You trail your stop loss. This is trailing stop loss. Protect your profit. This is how you'll be trailing your stop loss all the way up. So for this, you'll also trail your stop loss. For example, the market bounced there, so in that lower low I could have lost my stop loss. Then I will wait for the market to go with its movement or its direction, adjusting my trend line. After adjusting my trend line, you'll find that touch, the third touch is here. That will be my third touch. So the trend line, it began here, first touch, second touch, third touch. So after seeing a third touch, that means that you should be aware that after a third touch, it is likely that the trade or the setup will probably be violated because it has been exhausted. For example, here the trend line was broken at this area here. There is where the trend line broke. So for you to determine your exit position, here is where we'll put our take profit or our exit position. This is going to be our exit position. So let's adjust this to here. Yeah, you can see that's a huge profit, and the fact that you'll be trailing your stop loss, it will be very difficult to get out in a loss. If the market goes against you, the stop loss or the trailing stop loss will be hit and you'll be out. Now this will be our exit here, and this will be our entry right there. Yeah, now that will be our exit. So this is a very simple strategy that I use, and if you feel it is of importance to you or it has impacted your trading strategy, trading style. You can go backtest it, try it on a demo or something until you become perfect or good in it. Mostly remember, you need to trade the 15 minutes time frame. That is the best place to trade, because a lot of setups present itself there. So mostly you'll be finding your setups in the 15 minutes. You can also trade the other time frames like 4 hours, 1 hour, 1 day. Yeah, you'll find it also there. So if this video has been important to you, you can follow us. You can follow me on my social media on TikTok, Instagram, and YouTube. Kindly don't forget to subscribe, because I'll be dropping more and more education content which will be helping you or will help you boost your trading career. Also, if you are an expert, you can just subscribe and watch. Maybe you'll get a new content, because you'll get a new strategy, new content which you might add to your trading arsenal. So as you can see, the market was violated. We got out there. Then from this, you see the market began being choppy. So if I was to enter another trade here, I could have drawn a trend line this way. Yeah, like that. And then the first, second touch, and maybe third touch, the market was violated. I enter my trade there. Let me say here. I enter here. After entering there, I put my stop loss next on the lower high based on your risk management. Then I will draw another trend line from here to here, or let me say the recent trend line is from there to there. Now, if this trend line has been broken, I think there is our exit. If this video has been important or has been helpful to you, leave a smash and let's meet in the next video. Thank you for watching.